Well, we now want to talk about matters investing in Africa, and the Investing in Africa Conference is supposed to take place in London on the 10th and 11th of October this year, and Verdant Capital is one of the main sponsors of that particular conference. We want to talk to Edmund Higenbottam. He is the managing director of Verdant Capital. Thank you very much, Edmund, for joining us. And just if you could paint a picture of how the investments landscape in Africa looks like.
Driven by population and given by abundant resources is very clear. But I think in the medium term, short to medium term, we have some headwinds. But we are seeing higher interest rates in the US and in the West, as well as high commodity prices, high food prices, fuel prices. And those factors are negative to Africa, to the economies of Africa, at least in the short to medium term. But notwithstanding that, we see a lot of good opportunities across the board. East Africa and the balance the continent, we work across the board. And really, we're looking at businesses, or looking for businesses, particularly in the financial sector, which we see as being resilient in a downturn or resilient in volatile economic conditions, but also offering growth in their businesses at a premium to GDP growth. So businesses which are expanding into new untapped markets, or expanding their market share, or have a baked-in competitive advantage. In terms of our business, I was going to say, very quickly, in our business, our focus is investing in SME lenders, so specialty financial institutions, small banks, microfinance banks, a newer generation of these businesses as well, lenders. We're investing in SME lenders, businesses that are lending money to SMEs, small and medium-sized businesses. But we're particularly looking for businesses which are technology-enabled, and businesses which are really embedded in the overall financial ecosystem.
Edmund Higenbottam there from South Africa, speaking to us about investing in Africa, and he was talking about the investments landscape in the continent, and just saying the way there is quite some positive pointers to investors looking to put money into Africa, including the economies that are growing currently at a very quick rate, despite the slowdown that COVID-19 occasioned there. Despite the slowdowns in the economies, that economies in Africa are still growing very well. Edmund, we had lost you there a little bit. Could you just continue with the investments landscape in Africa?
So I think, sort of just rounding out, we're looking for good opportunities to invest in financial businesses which have a strong degree of resilience in volatile economics, and offering GDP growth, offering growth in their businesses faster than the broader economy, and they're offering that growth through competitive advantages, maybe technology driven, maybe other business practice. And they're either tapping into untapped markets, or they're growing faster than their competitors and winning with market share. And particularly, we're looking to invest in businesses which are lending to SMEs, enabled by technology and embedded in the broader ecosystem.
Technology investments. There's quite a lot of fintech support or funding that has been coming into the continent. Could you just talk a little bit about that?
Yes, 2021 was a boom year for venture investing in general, and particularly in fintech investment. 2021 is probably the biggest amount of capital into Africa venture ever in history. It's about $3 billion, and that's broadly consistent with themes elsewhere in the world. The venture and technology and fintech have generated a lot of excitement in capital markets globally. And we have seen a bit of a slowdown this year, 2021. Investors are looking for opportunities where there is a strong evidence of traction, the business models having traction in the target market, the business models have strong visibility on when they will become profitable business models, or if not already. So the focus has 2020, but there's still good money to be put to work in the sector, and there's still very, very exciting companies that are coming through the ecosystem.
Right. Let's now talk about the conference. You decided to sponsor this particular conference. What tipped your interest, and what do you aim to achieve during the conference, especially in terms of attracting investments into the continent?
A very close partnership with AFSIC, dating back for about 10 years now. The AFSIC Conference in London is a great place to meet a lot of interesting African businesses from different parts of the continent, particularly those businesses involved in the financial sector. And there's also a great opportunity for us and for others to reconnect with our close partners, our European partners, who invest alongside us or in our funds, in our structures.
Could we now talk about matters East Africa, because now we are bringing it closer home. East Africa has quite the population, about 145 million people. That is the potential market for anyone really investing in East Africa. There is also a combined GDP of about $147.5 billion. These are 2021 figures. It could be higher by now. What do you think is the place of East Africa in terms of investment in the continent?
So East Africa has always been a little bit ahead of other regions in the continent in terms of their broader financial ecosystem, and in terms of how that's evolved in technology and new business practices. And I think about that broader ecosystem, I'm thinking about things like what I call the rails, so mobile payments, mobile wallets, how data is aggregated and stored, and data around financial transactions. And East Africa has always been a little bit ahead. Kenya perhaps at the vanguard of these changes. But other parts of the continent have caught up to some extent, or are catching up. And where Kenya, East Africa has led, Southern Africa, West Africa has followed. Nigeria is a very big economy as well, and that's been based on that market has been very successful in raising venture capital and other forms of capital over the last 2 years as well.
And as Verdant Capital, have you invested in East Africa, and what maybe is your experience having invested here in East Africa?
So East Africa is our, notwithstanding other parts of the continent catching up, but East Africa is our biggest region in terms of investing. It's our biggest region in terms of all our activities. We completed an investment 2 months ago, a $7 million investment in a business called Watu Credit Uganda. And Watu Credit Uganda is a business that provides financing to border drivers, taxi drivers. And so they can down a small deposit, they can have a bike, which is their own. They can make money every day. They can pay their loan off once a week by mobile money. Better lifestyle for them and their families. And at the end of the 2 years, they own the bike. They own a bike that's 2 years old. They've paid off the loan. And for some border drivers, that's the first thing of value that they actually own. It's a very impactful business, but it's also a very profitable business. It's a business which has very strong credit underpinnings, very strong credit methodology and security of loans. And it's a business that's very scalable. So that's a great example of the sort of opportunities we're looking to support through our funds and our other activities. Right now, I think we've got another 6 investments in final due diligence, and we hope to complete most of them this year. And that's just East Africa. So East Africa is our busiest region at the moment, but we are currently investing in Southern Africa and West Africa as well, and we look to look for similar exciting opportunities across the board.
Right. When we talk about all these opportunities that do exist, of course there are some challenges that maybe investors face and also the business persons who are looking for investment face. Could you delve into that a little bit?
So one thing that makes international investors nervous is currency risk and the ability to take local currencies, profits in local currencies, or dividends or interest payments in local currencies, and convert them back into euros or pounds or dollars. And certain markets in the continent, that's been very challenging. So, for example, in Ethiopia, it's been difficult to get capital out of the country. Nigeria has had some challenges on and off in terms of getting capital out of the country over the last 5-10 years. And East Africa has performed very well in terms of Kenya, Uganda, Tanzania performed very well in terms of free transferability of currency. And that's actually very important because as an investor, you can look at the company, you look at the financials, you look at the management team, you can understand the business model, you can go on site and do due diligence firsthand and get comfortable making an investment. But it's very little you can do to take money out of the country if the currency stops being really transferable.
Right. Ed, so as we come to a close of this conversation, what are your closing remarks, and specifically, what do you foresee as the future of investment in Africa?
From a longer-term perspective, as I mentioned at the beginning of the interview, abundant opportunities, large population, strong population growth, strong resources, large markets, and these markets are being ever more penetrated by formal consumer goods, by more formal financial services, a broader range of consumption and investment. It's a very, very significant opportunity in the medium to long term. Short, medium term, I think markets are a little bit more volatile in Africa, largely driven by global macro trends, which are probably net less favorable to Africa for right now. And between all that, what's most exciting of all is a generation of entrepreneurs who are building businesses, have built businesses, and those businesses are scaling and growing, and they're offering something very different to their consumers, and they're offering something very different to the investors as well. And we look to support those businesses as they grow. We're not investing in early stage businesses. We're more investing at the growth stage. We look to support those businesses, and we look to get a very solid performance for our ultimate investors by doing that.